Alright, what's happening, guys? Welcome to another episode of Sensible Investing. My name is Jesse, and today we're going to be talking about Afterpay. More specifically, we're going to be talking about the reasons why I believe Afterpay will continue to outperform over the long term. And the reason why I thought I'd make this video is because recently there's been a little bit of panic about Visa releasing their buy now, pay later, or Afterpay equivalent to their service. So basically what happened is Visa has been talking about testing with select partners and merchants the ability to break down purchases into installments, i.e. you purchase something now, you break it down into say 4 to 6 installments, and you pay it across the course of 4, 8, 12 weeks, right? Which is basically Afterpay's business model. And as a result, there's been some massive panic in the market. People on the stock forums are going crazy. The share price has fallen off a cliff in the space of about a couple of days, and now everybody is saying that this company is doomed. Okay. However, what I think we should do before we feed into the chaos and the confusion is actually just take a step back and really have a look at the facts, figures, and fundamentals of this business but before we go all crazy selling out at a loss or thinking that the world's going to fall, okay? So this video, we're going to be focusing on some key figures and stats that I believe you guys should be paying attention to in order to make a decision as to whether you should either buy this company, continue to hold, or sell. So let's have a look at this. First of all, Visa aren't the first company to want to do this, or let's say the first credit card company who wants to implement the whole buy now, pay later functionality or service, right? Mastercard tried to do it last year in September, and I didn't hear anybody going crazy or losing their minds about this. In fact, Mastercard had actually tried to do it as early as 2016. So then this brings the question to my mind, okay, so if they looked at it as early as 2016, what happened, Why didn't it take off? Why are they looking at it again now? Is it in response to the fact that because Afterpay is getting so popular and becoming such a threat, that they're actually playing catch-up and being reactive rather than proactive? And some other questions that, gets me thinking is, well, what's going to happen differently this time, and why would people start just miraculously or suddenly taking this up now versus before? And why didn't they take this up earlier, but why did they take up Afterpay, right? So all of these questions come to my mind. And so asking ourselves these questions, we should also consider these other facts, right? So first of all, just a little bit of facts about credit cards and millennials, who are Afterpay's main target audience or main target demographic, okay? So the stats are a little bit varied, but I think it's safe to say that anywhere between 63 to 67% of millennials don't have a credit card. Whether it's they don't want to or they don't use it, for whatever reason, they don't have one, okay? Now, the other thing that we need to look at is, as you can see on the stats over here below, almost half of millennials would be more inclined to spend more or buy at a particular vendor or particular retailer or particular outlet if there was a little bit of incentive, i.e. the whole buy now, pay later incentive. And interestingly enough, 3/4 of them would be more likely to select a merchant to purchase online if they had this option available, okay? So then this gets me thinking, well, if millennials don't want a credit card, but then they want instant gratification and then to pay it off later, well, what do they actually want? And the answer is pretty simple, right? And that's the whole reason why Afterpay has taken off, is because it's filled that gap where millennials don't want a credit card, but they still want to be able to have instant gratification and then pay it off in sums sometime down the line. But let's now look at some figures and stats that really matter, okay? So let's look at the number of retailers in Afterpay's core markets, which is Australia, the United Kingdom, and the USA. Okay, so 187,000 retailers in Australia, just a little under 300,000 retailers in the UK, and 3.8 million retailers in the USA, okay? So let's focus on these numbers for a second. Now, let's look at their growth numbers. So in the space of 3 short years since their inception, Afterpay has managed to capture about 30 odd thousand retailers across the world, and 27,000 of those come from Australia, okay? And the darker blue bits are the likes of USA, which is a new market that they've expanded into, and I imagine their future reports will also show the UK numbers. But let's just focus on Australia for a second, okay? So 27,000 odd retailers in the space of 3 years versus about 187,000 total retailers, which means that in the space of 3 years, they've managed to capture about 15% of the Australian market. So if we then go back and look at these numbers here, and then compare that trajectory to the size of the UK market and the size of the USA market, and we do the maths, and if they follow even a similar level of, I guess, growth or trajectory, then the potential is massive, and I have no reason to doubt that millennials would behave any differently in the UK or USA to the ones who behave like how they do in Australia in terms of their purchasing preferences, their habits, their spending habits, and whatnot. Now, furthermore, I think that what we're going to look at next is even more interesting. So what I actually really wanted to look at and deep dive into this video with you is the actual traffic that's going to the Afterpay's website, both from a desktop and from a mobile number of visitors metrics. Okay, so as you guys can see, this is the Afterpay US traffic, and they haven't been going in the US that long, just a little bit under a year. But as you guys can see, the majority of their traffic is organic. Okay, so they have very little paid traffic, yet they're getting a lot of interest. But what's really interesting is if we look at the bottom right hand corner below, you'll see that there's been a massive spike in the last couple of months, okay, which really shows that this is starting to take off in the USA. And looking at this gives me a lot of confidence. Furthermore, if we look at the mobile traffic, you can see that the mobile traffic, since they launched in the USA, is becoming more and more prevalent and more relevant. And again, if we look at the fact that the majority of these are organic, right? So very, very little paid search traffic, yet the uptake, the interest in it is huge. Okay, so this gives me a lot of confidence. Now, what gives me even more confidence in this business is if we actually look at the backlinks and what people are clicking on, okay? Terms and conditions, terms and conditions, terms, okay? So we've got a bunch of people visiting a website. The interest and engagement is increasing, and everybody is jumping to terms and conditions, okay? So this makes me think. Now, if people aren't interested in using something or buying something or, just interested in a service in general, why would they look at the terms and conditions page, okay? And the answer is simple. The reason why they'll look is because they are interested. They want to use the service. They want to take it up. And that's why they're looking at this. Okay, so again, this gives me confidence and also excitement that people are keen on Afterpay, and the whole, visa scare, I think, is a little bit overcooked or overblown, okay? And guys, I think it's really worthwhile if we do a little bit of digging into the types of people who are referring people to Afterpay, right? So have a look at these types of companies. Have a look at what they sell and the types of people that might be interested in buying from these companies. And I think that if you have a look at this, then you'll start to get quite a little bit more confidence in the fact that Afterpay will be okay and will continue to be okay over the long term. Okay, so guys, that's the US figures. Now let's have a look at their UK figures, okay? So you'll notice how over here there's been a little bit of a dip in May in terms of the interest and traffic and engagement, and that's because Afterpay had actually changed their name to ClearPay, just because somebody else had already registered the Afterpay name and are using it, so they had to change their name. But what's interesting is the traffic dipped for about a month, and then it actually shot back up to more than double what it was, okay? So again, this really just shows that, it's getting attraction, it's getting traction, it's getting interest in all of the core markets. But not only that, but we should also focus on the fact that, again, the traffic majority of it is organic, right? So very, very little paid search. This is all organic traffic. that's happening. And if we actually look at some of the people, some of the backlinks, right, we'll start to get even more confident and more excited about its potential. So the British Fashion Council. Now, if you guys have some time, I would encourage everyone to do a little bit of research on what the British Fashion Council is, what that actually means for retailers in the UK, and the significance of this one little piece of information. Okay, so moving on from the UK, guys, now. So let's have a look at the core market, Australia, right? So, guys, much like what we saw in the UK and also the USA stats and figures, uh, low or decreasing paid search traffic, a good amount of organic traffic, still maintaining the same level of interest or slightly increasing. This gives me confidence that the business model is sound, and I have no reason to doubt why it won't continue to be successful. Same for the mobile. In fact, mobile is continuing to increase and continuing to generate more interest in terms of traffic. As you guys can see below again, the traffic, majority of it is organic, very little paid search. So word of mouth, general, social media, people sharing, people using. But I think most importantly is that word of mouth, right? So everybody's starting to catch on, get interested, and start to use the service. So guys, my concluding remarks. Now, just to recap, there's been a lot of bearishness and a lot of doomsdaying about Afterpay. And the bears will argue with the business model. The bears will argue that the company is not yet profitable. The bears will say a lot of things, okay? But what they cannot argue with are the facts, and the facts are that people love the service. People are more inclined to buy and buy more if there was a service like this. People, especially millennials, don't have or don't want credit cards, but they still want to be able to have instant gratification, pay later. What's going to happen differently this time around with Visa that Mastercard did last time around back in 2016 or even as recently as 2018? And why would people all of a sudden change their buying habits just because Visa released Buy Now, Pay Later? And why didn't they do that before with Mastercard twice? Okay, so these are all of the questions that we need to ask ourselves. So just to conclude, guys, people love Afterpay. I believe people will continue to use it, and if merchants don't offer it, they'll be missing out on a big portion of their shoppers or their target demographic. Alright guys, that concludes our video today. I hope you enjoyed watching it and learned something new. Now, if you want to see more videos like this in the future, where we deep dive into companies and research and look at things that people aren't looking at and aren't thinking about, then make sure to hit the like button, subscribe, share the video, leave a comment, and until next time, happy investing, and I'll catch you in the next video.